What is going on, guys? Welcome back to another brand new video. Today we're going to talk about something which is a simplified method of the way that I trade in my videos, or in my the way I teach in my videos. It is very easy. I believe if somebody has around 10 to 20% of trading knowledge, they can benefit from this. And so we're going to talk about it real quick. But before that, before we jump into the video, there will be a link in the description and in the first comment below, which will take you to Binance.com, which, if you're not familiar with, is one of the world's biggest crypto exchanges. You can buy crypto, you can sell crypto, you can trade, you can swap, you can transfer, you can do whatever you want. And if you use my link to sign up on Binance.com, you will get a 20% discount every time you have to pay a transaction fee. So go ahead, take advantage of that. And also there will be a link to my Twitch channel where I stream video games almost every single day. So if you have a couple of extra seconds or minutes, you're more than welcome to come and join us. Having said that, let's jump into the video. So today we're going to talk about supply and demand. I've done a video in the past, I believe only one video though. I don't know why I never did another one. But today is the day we're going to talk about it. And of course, now that we have progressed more, we have learned more, it will be much easier for me to explain to you guys much better, in a much better way. And hopefully whoever watches this video at least have around 50% of trading knowledge so they can understand what I'm talking about. But even if you don't, it's really easy. It's really simple. And also, I believe I should mention here that whatever is shown and done in this video is not trading advice, is not investment advice. I'm not an investment advisor. I do not have a trading license. I'm in no way qualified enough to tell you guys what to do with your money. So please don't hold me accountable for your actions and decisions. Okay, this video is only and only for entertainment purposes. So today we're going to talk about supply and demand. In simple words, if you don't know what supply and demand is, it is very similar to support and resistance. And when I say it is very similar and not exactly support and resistance, is because support and resistance are areas where market can reverse from a couple of times, okay, twice or thrice. But in my opinion and in my experience, supply and demand levels are respected 90% of the time only once. Okay, more than that, it will be just taking unnecessary risk. Okay, so today we're going to talk about that, but you guys will hopefully understand more as we talk about it more. Okay, and this is very similar to smart money concepts, which I use in my trading, which I've shown over and over in my videos, and you guys will understand why. You guys will see why. So let's talk about it. Let's jump into the video. Okay, so this is a Bitcoin USDT chart. I will go through one more chart in this video if I have the time. But basically, supply and demand. So supply and demand, first of all, what is supply and what is demand? And how does the price relate to both of them? So when a thing is more in number, okay, so the quantity of the thing which we are talking about could be anything, could be chocolate, could be a car, could be a piece of jewelry or whatever, right? Anything. When it's more in number, its price is going to drop. Okay, it's going to become a little bit cheaper. But when the thing becomes rare, okay, when the thing has a very limited quantity or a very limited supply, it's not being supplied into the market more, it's not being issued for the public more in a big number, the price is going to go high. Okay, because the demand is going to increase. Everybody is going to want a little bit of it, a little bit of part of it. So the demand is going to drive the price higher. So you guys can tell that when the price is dropping, it's going to be from a supply level. Okay, so the price drops from supply levels. Okay, the price is dropping. That means the supply is high, and the demand levels drive the price higher. So it means that the demand is increasing, the price is increasing. Okay, so in other words, supply levels can be notified as or labeled as resistance, right? And who's calling me, bro? And the demand levels can be labeled as support levels. Very simple. This is the simplest way I can explain to you what supply and demand is. Okay, and I trade these levels as reversal levels. Okay, supply and demand can be marked in a trending market as well. Okay, when the market is trending in cycles, you can actually label and draw some supply and demand zones But I prefer to trade supply and demand in reversals, okay? Because that is one of that, first of all, is a guaranteed, no trade is a guaranteed trade, okay? That it's going to end up in a profit. But the percentage of it being a successful trade is higher, okay? In compared to when you're trading supply and demand in a trending market. Plus, in a trending market, it becomes very confusing for you to trust. For example, over here, okay, price is reversing from here. This is a demand zone, okay? Price reversed next from this. This is a demand zone, okay? Price can reverse from here. This is a, so how do you know which one is going to, how do you know from which level, from which demand zone you should enter for a buy? Okay, so in a trending market, this is the problem. You, first of all, you never know from where the market is going to reverse, the trend is going to reverse, and which zone the market is going to respect first. So this is a problem. So I trade supply and demand zones in reversals. Okay, now that we have established what supply and demand is, and are these levels better to trade in a trending market or in a reversing market, now we need to understand that which supply and demand zones are the best to trade the reversals from. And really quick, I will say that the lowest point and the highest point are the best to trade the reversals from. And why do I say that? Let me show you examples, and hopefully that'll prove to you that. For example, market structure is very important, okay? Without market structure, you cannot understand which supply and demand level is going to be respected the most. So first of all, you guys see that the market is falling, okay? And then the market started to reverse from here, this point, okay? So it is a downtrend. The market started to reverse from here. Not only did it reverse, it successfully created new market structure. How did it do that? By creating new higher highs and new higher lows. So all these previous highs are broken, okay? That is number one. New market structure is created, means reversal is happening. Now, before this reversal, okay, where was the lowest point of the swing? Where was the lowest point of the swing where the market reversed from? Where was the last selling pressure? It's right here, okay? So what I am going to do is I'm going to label, so I'm going to take into consideration this last bullish candle, okay? So this last bullish candle, and I will extend it into the future. There we go. This can also be labeled as an order block, okay? Order block is where the market comes to a halt and it starts collecting orders before making its next move, okay? So now, as we can see, the market created this, okay? And then where is the highest point of the swing? So what we are looking for is the lowest point of a swing and the highest point of a swing, okay? Swing, if you don't know what a swing is, let me show you. This is a market cycle. The market is trending in cycles, in waves, okay? So a low and a high is a swing, okay? So a low and a high creates a swing, a full cycle, okay? So a low and a high is a swing, okay? This is basically a swing. This is a swing, and this is a swing. This is a swing, okay? So a swing is a cycle, which consists a high and a low, okay? So we have this, which is the lowest point of the swing, lowest point of the cycle. This is our demand zone. And we have this, which is the highest point from where also the market has reversed and has broken the previous lows. For example, all these lows, this low, this low, okay? So we know that, and also over here, one more thing, guys. As you guys can see, that the market was also falling over here, breaking previous lows until this point. So it reversed from here, created new market structure. So now when this happens, wherever the new market structure is created can be our zone, right? And so we will take this last selling candle and extend it into the future. And you can see that the market was also respected here and also being respected right now. Now the thing is that this is an inner swing. Okay, this is a swing within a swing. So there's going to be a major swing. Oh, there's going to be a major swing, and sometimes in between there is going to be minor swings. Okay, but the same concept, the same principles apply to both of them. Now, would I have taken a trade over here? Absolutely. Why? Because this buying pressure is no ordinary pressure. Okay, this tells me that this is where the real money is involved. Okay, this takes a lot of money for the market movers or the market makers to move the market like this. Okay, this is pure sheer buying pressure. So would I have taken a trade over here? Absolutely. But I would have entered here, and then I would have gotten over here whenever the market was about to reach this highest point. Okay, because I wouldn't be sure if the market is going to continue higher or reverse from here. So also one more thing, the faster the market comes back, bro, people decided to call me today, all the people. Anyways, so the faster the market comes back, the higher the chances are that the zone is going to be respected. If the market takes a couple of months or a couple of years, you cannot say for sure that this zone is going to be respected. It does get respected in some scenarios, but only for a little bit before it fails. Okay, before the market just breaks through. But right now, if the market decides to reverse to this zone for Bitcoin, 17,000, 18,000, for sure, I would take a trade over here. I would. I'm not telling you guys to, okay? I'm not telling you invest your money over here. I'm saying I would. I would invest right here in the middle, okay? So this is one of the zones, okay? And if the market comes back to this zone, I would for sure sell it. And I think the market would come here and drop for a little bit, just for a little bit. Remember, we're trading at reversal, okay? We're not trading it for a long time, depends. The market, maybe it would come here, create some liquidity over here, and continue here, and then drop back to that area, right? To the nearest point of liquidity, and then reverse from here. So whatever that are, or at least my intention is to get into the market and leave the market as soon as possible. I do not like to stay in the market. Whenever I do stay in the market, I lose money. I don't know why. I don't know if it's just with me, but I prefer to get into the market and leave the market as soon as possible. So this is one of the examples. Okay, not bad. So I'll just go through another example real quick. Okay, so this is GBP JPY. Okay, this was a major swing. Okay, this was not a minor swing, because from here, okay, the market was falling, and then look at the way the market reversed from here. Look at the buying pressure. Okay, it broke these highs, these highs, created new highs over here, right? So when the market is going to come back to this demand zone, I will be, so if there's a longer wick, there's huge wicks, I'll be marking the wicks. Okay, now, so the problem here is that the market took quite a while to come back to this zone. So this happened in June and this happened in July. So 1 month, not bad, right? So, but you guys can see when the market came back. So whenever the market comes back to a zone, I trade at the half. Okay, I enter the market at the half. My stop loss, of course, will be just below this lowest low. And my take profit would be closest to the nearest point of liquidity, which is here. So you guys can see if the market comes back to that zone, right? This is about 500 points, 500 pips in profit. Okay, so the thing about this is that whenever there is an opportunity to trade at the swing highs or the swing lows, okay, or at the demand or supply zones, it gives you a very handsome profit, very handsome profit. Of course, not always, but whenever it happens, okay. And so I was looking at the market at GJ today, right? Right now, GJ is continuing higher, but if GJ ever decides to come back to this zone, this will also, now it depends. If it takes quite a while, then, I mean, if this high is broken, the market continues high, then probably it's going to take a while. But if the market, you know, just keeps doing this and reverses somewhere here, comes back here, August, maybe next month, this is going to be a very good idea for a very good zone for a buy. Okay, I'm not telling you, again, this is not financial advice. Okay, I'm just showing you what supply and demand is. And also over here, right, you guys can see that the market broke. Not so much. There was not enough structure over here to label this uh, as a supply zone, but the market did break the market structure, this market structure over here, the lowest lows. Okay, and then it came back to that. And now I think that when it comes here, again, this will be a potential area for a little bit of sell. I'm not saying it's going to drop 500, 1000 pips. Okay, keep that in mind. Okay, whenever it comes to a point of reversal, again, I trade supply and demand zones in reversals. Okay, so when it comes to that area of reversal, I stay in the market for a little bit. I fulfill my goal and I leave the market. I do not stay in the market. So when I said that supply and demand is very similar to the method that I use, which is smart money concepts, why is it that? So the thing that supply and demand and smart money concepts have in common is just, I had a brain fart. I just forgot the word common. So the thing that the principle that these two methods have in common is the market structure. Okay, so whenever the market creates these points of reversals or these points of supply and demands, and whenever the market comes here, they reverse in a very heavy, very fast, very impulsive manner. Okay, very fast moves. And whenever fast moves or big moves happen, high volume moves, this means that the big money is involved. Okay, so wherever the big money is involved, smart money concepts apply. So supply and demand zones, you can see whenever the market comes to that area, it reverses in a very impulsive manner. Or whenever the swing high or swing low is created. By the way, this is this right here is a minor swing. Okay, this is the major one. So I mean, whenever the market comes to these area, it reverses very quick. Okay, in a very fast manner. For example, you guys can see over here, after creating this swing high, when it came down, broke all the previous lows and reversed from here and came to that area, you can see how fast it moved below. Okay, this drop was also about 700 pips. So if the market comes to that area again, it's not gonna drop 500, 700 points, but it will be a very handsome profit. And the thing also about these zones is that I trade in the half, right? The thing about these zones is also that the profits, the potential for profits is very nice, and the stop loss is very low. So about 50 pips in this case, which is not small at all. But considering the profit, it is a very good trade. Okay, let me show you guys, for example. So profit, stop loss just here, take profit here. About 8 to 1 risk, about 8 to 1 reward to risk ratio, which is insane. Okay, this is a very good trade. So that's why I'm looking at this area, that area, and especially on Bitcoin. Okay, if the market comes to that area, I would sell for a little bit. If the market comes to this area, I would buy for a little bit. Now, of course, these things happen across all the trading indices, commodities, currencies, everywhere. This is happening everywhere. Forex, whatever, gold, I don't know. I have not looked at gold. Is gold even in my list anymore? No, it's not. Or it is, I'm just too blind to see it. But like I was saying, this happens everywhere. Okay, so and this takes a lot of patience. These kind of setups happen on the smaller time frames, but the smaller time frames, I don't really trust them. For example, this area right here. Okay, so if the market comes back to this area, this becomes a very good demand zone for a buy. Okay, so it will come here and I'll buy. Why? Because you can see the market fell very fast, but it also reversed and broke the previous market structure. So whenever the market is reversing in an impulsive manner, number one. Number two, it's creating new market structure. I will look at the most recent point of reversal. Okay, for example, this. Look at right here. Bro, why is everybody calling me today, man? Anyways, the market created new market structure in a very fast manner, broke previous highs, came back to that zone, and boom, reversed. This is happening across all time frames. This is happening across all platforms. It just takes a very good and a very patient and a very experienced eye to look for these zones. Okay, So that's it. I hope you guys learned something from this video. I will post more videos in the future talking about supply and demand. It is very simplified version of smart money concepts. I love it personally. Okay. And yeah, that's it. Hopefully you guys learned something new from this. If you guys have any questions, drop them below in the comment section. I'll see you guys in the next video. Peace.